The new kid on the block has seemingly hit a bit of a roadblock when it comes to continuing their strong performance from the fourth quarter. G Mining has reported their first quarter financial results. And while overall they were strong figures, they don't quite measure up to the fourth quarter performance posted by the team. And well, they're taking some flack for it. Let's dive in. G Mining Ventures in the first quarter of 2025 reported top-line revenue of $98 million, a 4% decline versus fourth quarter revenue of $102 million. The revenue figure follows total gold sales of 35,435 ounces at an average price of $27.66 an ounce. The fourth quarter of 2024, which was G Mining's first full quarter of commercial production and our only real comparable here, meanwhile saw gold sales of just under 40,000 ounces at an average realized price of $25.60 an ounce. Cost of goods sold, meanwhile, came in at $38.1 million, a slight improvement from the $39.5 million figure posted in Q4. While income from mining operations totaled $59.9 million, down from $62.8 million in the prior quarter. Despite lower sales and lower income from mining operations, net income actually increased on a quarter-over-quarter basis, going from $15.2 million or 7 cents per share to $24.4 million or 11 cents per share. Adjusted net earnings did not follow this trend, however, which dropped from $36.9 million or 17 cents per share in the fourth quarter to $35.4 million or 16 cents per share in the first quarter. EBITDA was basically flat at $66.7 million in Q1 versus the prior $66.6 million, while on an adjusted basis, EBITDA fell from $77.9 million to $68.6. Cash flow is where the sales shortfall really started to show up, however, with cash flow from operating activities falling from $43.4 million to $30.5 on a quarter-over-quarter basis, while free cash flow crashed 32%, falling from $53 million to $36. And in terms of the balance sheet, G Mining saw their cash and cash equivalents improve from $141.2 million to $149 million on a quarter-over-quarter basis. As you can likely see from the financial data, particularly the decline in revenue, things didn't exactly go to plan in terms of operations in Q1. Total production of 35,500 ounces of gold was down 11% from the 40,100 ounces produced in the fourth quarter, while the company admitted that they had produced 19% of the midpoint of 2025 guidance in Q1 versus a planned 22%. The shortfall here was blamed on what G Mining called unusually heavy rainfall, with rainfall during Q1 totaling 1.3 meters, which is close to double historical figures. But it wasn't just rainfall here that was at issue, with the strip ratio increasing from 0.97 to 1.45 in terms of waste to ore on a quarter-over-quarter basis, with ore tons mined falling from 2.2 to 1.5 million tons. In terms of processing, plant throughput was also down, with the average throughput falling from 10,500 tons per day to just over 10,000 ounces per day, quarter over quarter, while grades fell from 1.45 grams per ton to 1.4 grams per ton. The decline in plant throughput was blamed on unscheduled downtime related to a SAG mill liner replacement, with a new liner installed in April that is expected to improve plant availability and throughput. Recoveries also fell, dropping from 89.2% to 87.7%, meaning G Mining saw a confluence of issues during the quarter that ultimately impacted production. These issues, of course, impacted costing. Total cash costs increased from $577 to $689 an ounce, a 19% increase, while all-in sustaining costs increased from $862 to $960 an ounce, which was a less dramatic 11%. Costing here was, of course, impacted by sales volumes declining by 11% quarter over quarter. Weirdly, cash costs came in above the upper end of 2025 guidance, which calls for cash costs in the range of $590 to $655 an ounce, while AISC came in just barely above the lower end of guidance, which calls for all-in sustaining costs of $955 to $1125 an ounce. Yet unit costs at Tocantinzinho are expected to decline as production continues towards nameplate capacity. Gold production across 2025 is guided to be in a range of 175 to 200,000 ounces, with production weighted towards the second half of the year. Outside of Tocantinzinho, which is G Mining's only operating mine currently, the company is also calling for $200 to $240 million in development capital to be spent at Oko West, where early works construction has begun at a project project that is ultimately expected to produce 350,000 ounces a year over a 12-year mine life. Concrete work here is expected to begin soon, while first deliveries of equipment ore are expected to occur in Q2, alongside final permitting. A financing package is expected to be announced this summer, which, as per the earnings call, isn't expected to be dilutive to shareholders, while a formal construction decision is expected early in the second half of this year. All right, so let's wrap it up. Was it the best quarter for G mining? No, that was arguably the fourth quarter of 2024, but this was the second full quarter of commercial production, so we'll give them a bit of a pass here. The kinks are still being worked out of a brand new mine, and that takes a bit of time. Things still appear to be largely on track for guidance, although production did come up a bit short. On the earnings call, management did say they are running at 108% of nameplate capacity at the processing plant in May so far to date. And H2 of this year is expected to see higher grade ore processed. So that issue seems like it will rectify itself. In any case, they are still an extremely low-cost producer, and they're still making good money doing what they're doing. All right, everybody, thanks for watching. We are in the thick of earnings season. We've been getting a lot of people asking us to just cover different companies' earnings, which is kind of new. We appreciate all the engagement, all the comments, sincerely. So please let us know what you want us to cover. We're trying to do our best to give you guys the content that you want. And also, if you enjoyed it, maybe hit that like button. If you haven't already, subscribe. Maybe share the content. I don't know. All right, everybody, thanks for watching.